For my own background, I was a Royal Marine by training and found myself in East Africa by accident as a result of some wars that were going on there. And in 1994, started one of the first 3 ISPs in Kenya. 1996, we opened in Uganda. In 2001, we started the first data infrastructure company in East Africa, Kenya Data Networks. I subsequently owned briefly and then sold Africa Online before in 2008 starting the Wananchi project. And Wananchi's vision is to become the largest home entertainment company in Africa. People want services, but they want those services at a price that they can afford. So when Mark and I started looking at this business, we started grappling with how can we get prices to where they can be afforded. And at the time, in 2008, the only way to get connectivity in and out of East Africa was by satellite. And as you all know, that's no basis for a broadband industry. So myself and some of my colleagues, Joshua here, we started lobbying the government in 2002 to build an international fiber optic cable. And out of those lobbying efforts was born the Teams International Cable. That cable was sponsored by government, and in fact it's one of the most innovative models for international fiber optic cables anywhere in the world. Teams was the result of collaboration within the industry, where we said to government, look, we don't want another gatekeeper, another bottleneck. What we want is cheap connectivity. And so the government sponsored a feasibility study. The cable was eventually owned by all the operators. And what you got for owning that cable, and that was a $120 million project, entirely financed by local Kenyan companies. And what you got for owning capacity in that cable, or for owning shares in that cable, was capacity, not a financial return. And so in the planning process, we sat down and said, you know what, instead of having a 640 gigabit cable, let's have a 1.2 terabit cable so that we'll never run out of capacity. And in 2009, that cable was finished. And since then, there have been 2 other cables coming to East Africa. One, Seacom, which its financial returns were based on the World Cup in South Africa. Otherwise, it would probably never have been built. And the second one, Easy, who weren't really worried about financial returns. They were sponsored by development finance, probably should never have been built. But as a result of that misfortune for them and fortune for East Africa now has 3 competing cables, and the Teams cable, arguably, in competition economics terms, behaves like 8 cables. And what that means is connectivity prices in East Africa have gone from what used to be $3,000 or $4,000 a megabit in 2008 to something between $50 and $60 a megabit today. And that's a phenomenal drop, and prices are still trending down. And we expect that trend to continue. What it's resulted in is an incredibly vibrant market where the battleground has moved from connectivity on the international segment to deploying the local loop. So that was the first problem we cracked. The second problem we had to crack was the content problem. There was very limited content, only free-to-air broadcasters doing it. And so we invested in a media company where we're now producing 10 of our own TV channels under the brand Zuku. And that's a platform for us not only to create content today, but also increasingly to bring in local content to strengthen the offering. And the last thing we did was we bought a number of business services companies to give us the basic skills and expertise to be able to run a far bigger company. And when I say far bigger company, we expect to have over 1 million subscribers on our home entertainment network within the next 3 to 5 years. We already have a cable TV operation in Nairobi and Dar es Salaam, building out in Mombasa soon, and Kampala. We have a mixture of technologies on HFC cable and GPON. We've also deployed a satellite direct-to-home TV platform, which is operational in Kenya, Uganda, and shortly Tanzania and Rwanda. In total to date, we've invested nearly $170 million And the last round of financing was in April this year, where we raised an additional $50 million. And what was significant about that was that not only did we have institutional investors such as Oppenheimer Fund from America, Q Capital, a London hedge fund, but also Liberty Global invested in the group. And that's a real stamp of approval for what we're doing. They clearly also believe that Africa is the next frontier for home entertainment and broadband. The second thing that was fundamental to our strategy, or is fundamental to our strategy, is to build a strong local management team. For those of you that haven't been to East Africa, the quality and the caliber of people on the market there is extremely high, and historically international companies have tried to come into the market and use expatriate teams to drive local businesses, and they've generally failed. Airtel being a classic example, since they acquired Zain Africa recently, they have really failed to extract any value from that acquisition. And we took many of our lessons from Safaricom, who many of you will have heard of, a phenomenal success story in the mobile phone market, where they based their management team on a strong local management team, and we decided to do the same, and it's really paying dividends for us. The final leg of our strategy was to have a regional strategy, and many people will look at Africa and say, oh my God, I don't really know where it is and how to get there and what to do. It's a huge continent. Some will look at it and say, okay, let's go to Johannesburg. And of course, South Africa is only a tiny part of the African continent. Others will make the mistake, which Africa Online did, and which Airtel have done, of assuming that just because it's a continent of 1 billion people, it's actually sort of just one country, and it's not. It's 53 different countries. Every country has a different regulatory environment. Every country has a different culture. And therefore, capitalizing on that requires a very unique sort of regional strategy, but a regional local strategy. And we have gone out of our way to make sure that in all the markets where we are, we have local partners. In Kenya, we have very strong local partners. One of our investors was the former chairman of the Nairobi Stock Exchange. In Tanzania, the chairman of my board, Ali Mufuruki, is on the Central Bank of Tanzania and a very successful Tanzanian businessman. In Uganda, Patrick Petaturi, who is chairman of the Uganda Investment Authority and chairman of the Uganda Power Company, is also one of the largest individual investors in Uganda. And that policy of localizing a regional strategy has really paid very handsome dividends for us. So, in terms of our challenges, we've had a number of challenges. I mentioned local management team. Actually, up until December last year, I was one of the investors, the chief executive at East Africa Capital Partners. Things weren't going as well as we wanted. We had employed a whole bunch of expatriates, contrary to our strategy. It wasn't serving us well. We fired them all. And in January, I was the last man standing, and so the board and investors asked me to take over as chief executive. And since then, we've replaced the entire management team with local Kenyans, and the company is growing from strength to strength. Money is always a problem. Africa is a place where it's tough raising capital, despite the fact that we've raised $170 million in equity. It's very, very hard raising debt capital, and as many of you will appreciate, in a growth-based business, you really don't want to be financing set-top boxes and infrastructure out of equity. You need to be able to bring in some debt financing, and it's very tough doing debt financing in Africa. Africa ignorance, I would say, is another one of our big challenges. We spend a lot of time dealing with vendors and particularly content suppliers, and they've never done business there before, and the immediate reaction is, well, unless you can give us a $100,000 contract for content, it's all too difficult. Which is remarkable, really, considering that Africa is the next fastest global emerging market after India and China. And what's more, those same content providers are currently making nothing out of Africa because it's all being stolen. And so us as a legitimate company offering security and paying for that content they should be seeing it as an opportunity. And I'm sorry to say that whilst some are beginning to learn, the general ignorance of the content is still, of the continent is still very much there. And we hope over the next couple of years that will change. And with that, I will pause. And I'd like to ask Joshua. Joshua, come and join me to take questions. Joshua is my competitor in Nairobi. Please. Okay. Do we have any questions?
Yeah, how many TV subscribers do you have?
We don't disclose or discuss details of our subscribers at present. As those of you who are in the wireless business know, wireless has a lot of limitations, particularly if you're doing video. The capacity is not there. Historically, the incumbent telephone companies have been the ones providing fixed line services on copper. They have singularly failed to deliver. In fact, France Telecom, who took over Telkom Kenya nearly 3 years ago now, have got less fixed lines today than they had 3 years ago when they took over the company. And that's largely because the infrastructure is outdated and the focus has been on investing in wireless and not in fixed lines. And however, today you have a number of organizations who are coming along and saying, you know what, we need fixed lines just as much as everybody else. And I think you'll see that changing dramatically over the next 2 to 3 years. Any other questions?
Why did you choose East Africa?
Sorry?
Why did you choose East Africa? You were there.
Why East Africa? Well, it's quite an in-depth subject, but you can divide Africa into sort of 4, arguably 5 economic regions. Southern Africa, primarily influenced by South Africa. Western Africa, primarily influenced by Nigeria and Ghana. And Eastern Africa. The difference between those, and then obviously North Africa and French-speaking Africa. The difference between those regions, without generalizing too much, is Southern Africa has had a lot of rigidities as a result of the rigidities in the South African market, and has found it very hard to leverage the historical wealth of South Africa to build the region. That's been combined with a number of failed states around them, Zimbabwe being an example. Western Africa has been very fragmented and is driven by oil, minerals, resources, and it doesn't have the depth of economy of East Africa. East Africa is becoming a truly regionally integrated region